p.m. If you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer the Markets. We're getting ready here for our live session. It's going to be a really strong session. By the way, if the markets are pulling back, if the markets are correcting, and you knew ahead of time, not only to potentially expect it, but clearly what levels would be providing instead of repairs going forward, breakdowns during the pullback, does it really matter? Well, of course, that sense of control, that clarity is everything. We're going to do that today. We're going to bring as much clarity as we can. Now that 27,500 has broken, we're going to take a look at the markets together across all markets, specifically Bitcoin. We're going to look on Bitcoin. What is next now that price is broken down? That means where is the invalidation? Where is that breakdown nullified and wrong? Where would you see some type of reversion upwards towards the greater trend in place? Greater trend as far as the last few months since January 2023, back towards that uptrend. Or where are we looking at a further pullback turning into a correction? We'll look at those levels very clearly. We'll look at them from the perspective of now that we are seeing that trend continuation, well, what comes next is consolidation. And that's what we're looking for. Consolidation for Bitcoin at this particular point in time. Now, don't forget, it's not like traditional markets. Traditional markets, you're looking at the indexes and there's a 20% pullback, and that's a bear market. Bitcoin, 20, 30% pullback during a bull market, that's to be expected off the get. It could even go down substantially further. I mean, you could be riding a 50% pullback in a bull market in Bitcoin, and that's just Bitcoin things. Right now, this current, let's say, move off of the low, I know a lot of people are talking about, well, up only new highs in 2023, and this is the beginning of a bull market. Maybe it potentially could be. If you go back and you look about where we called the Bitcoin bull market breakout, well, that was 4 months ago off of the bottom. But that doesn't mean that bull market breakout is going to remain intact. You have to follow what's going on, and you have to do it without bias. That's the only way. Unprecedented times call for incredible, heroic effort. You have to make sure that you stay ahead or you will get left behind. We could potentially have a breakdown, in my opinion, my humble opinion, anything above 19, 20,000. That's just going to be a test of the bull market breakout, and why that would not be just a pullback. That would be a correction that would still be healthy. A breakdown below that, we're going to prepare for that. This week, I will be looking at, and specifically if we come in and we test this level 25,000, just above it, 25,200. This was a major repair that took place above this resistance. If I zoom out and you could see that, this was the lunar low. After the lunar collapse, price found support in this area. You could see that breaking out to the upside, that was resistance. That broke above, we lost that. After repair upon repair upon repair in 2023, we've seen our first breakdown, and now we've seen our second breakdown. That's 2 breakdowns. Now, this one is a lighter level. Breaking down below 25,000, well, that would be a major repair. That would be a major repair. Again, after that lunar low gave way, here's the support breaking, here's that peak breaking, and that collapse all the way down to the previous cycle ceiling. That was on that Celsius and 3 arrows low. And then price bounced up, right, into that area. That area is 25,000. That's an important area of resistance. That spike down became resistance. And then that area over here, once again, was resistance in late February, right? You could even see out of the U.S. banking crisis, we came into that area again. After that spike for a couple of days, that was resistant. We want to hold that level. Giving up that level, that would be 2 major breakdowns. Now, we're on 4 major repairs in 2023, but that would then be 2 major breakdowns. That's not good, but you could do the math. 4 major repairs minus 2 breakdowns is still +2. There's still a bullish structure in place, and that would not be the end of the bull market or the bull market breakout, but that would be setting up a potential test of the bull market's breakout. And it doesn't mean there's no guarantee just because you were told up only that it's going to be up only. You have to stay ahead of it. We will do that. That video will be coming. We're going to look in this video a little closer about what comes next as far as invalidation levels or where or how that movement to 25,000 might look. Right now, I just want you to focus in on as that we are in this trend continuation off the low. It would be quite normal to see some type of consolidation before the next move up. We are in an uptrend currently. We're in a greater downtrend. And that downtrend right over here, that looks to me like an upward sloping channel. It looks to me like a bear flag. And technically, if that bear flag breaks down, that could spell trouble. We will be prepared. We will be prepared. If you're not yet subscribed to the channel, go ahead and do so. We've not only taken a look early January of what that Bitcoin bull market prediction was, right? Taking a look at potential pre-halving, what price targets could be, the underbelly breakouts signifying the beginning of the bull market, another confirmation and check. By the way, ever since that's happened, we've never lost the low, but that doesn't mean that we won't this time. And then we've been looking and preparing for ourselves as a lot of people were getting very, let's say, euphoric on this move up. We were talking about, well, we see this deviation occurring between liquidity. We see this deviation occurring between yields. And usually when that happens, Bitcoin's wrong. Sure enough, Bitcoin and people started screaming alt season. No, this is not alt season. Listen, I root for Bitcoin, but Bitcoin will do Bitcoin things in Bitcoin's time. And then we want to make sure that we stay ahead. Looking at CNBC homepage, we see there's a lot of red today across equity markets. We have today big earnings. We have Microsoft after the bell and also Alphabet after the bell. And that is going to be very important, and the markets are indeed going to key off of it. Right now, this is an important quote over here. This is how markets are currently priced in. Or I should say, a week ago, how markets were priced in. Markets seem to be convincingly anticipating that there will be no recession, right? Right now, the markets are pricing indeed a soft landing. That inflation will fall, right? That these deflationary forces are going to continue to prevail. And at the same time, that the Fed and the ECB could lower rates by the end of the year. That's what the market is currently priced in. Okay, so that means that if indeed that we do enter a recession, markets are mispriced. If inflation does not continue to roll over, and we will look at that in just a moment, specifically we'll be looking at core inflation, markets are not priced correctly. And or if Jerome Powell tells you next week on May the 3rd that the Fed's intentions are to keep rates elevated for as long as possible, and then the markets might not be priced correctly, pricing in those rate cuts into the end of the year. Now, the market could be correct. The market could be correct that by the end of the year, the Fed is lowering rates. If the Fed is lowering rates, that's likely because that either we've entered into a recession and or something has broke. So, without further ado, Coinbase files court action compelling the SEC's response to crypto rulemaking petition. Coinbase joining the fight over here. The fight just to get some clarity. What could we do and what could we not do? Today we filed a narrow action in the U.S. Circuit Court to compel the SEC to respond, yes or no. Just is it yes or no? To a rulemaking petition we filed with them last July, asking them to provide regulatory guidance for the crypto industry. Good news. I mean, we all want clarity, right? Coinbase over here with some big pockets joining the fight. We're looking this morning at the NASDAQ rolling over. NASDAQ, you can see over here, you can see this is, by the way, and I'm going to show you in a second, but I don't want to get off my chart here. This was a breakout, the first repair, the positive structural change in the NASDAQ since all of 2022. The purple line was the second one. You can see the breakout, retest, resumped up. It's all positive and it looks good, but you can see that price is currently, right? You can see the curve over here rolling over a little bit. Now let's look at it with a little more clarity. First, that thing we looked at is this line over here. This line is simply taking this line off of this low in 2023 and then the low in mid-March, drawing a trend line connecting those two and cloning it. And you can see that clone touched these 2 points, the two lows over here, and then we had a breakdown. That was our first indication that, you know what? It doesn't mean that the markets are going to test their 2022 low. It doesn't mean that the markets are going to go ahead and break those lows and crash and burn, which all of those things could happen. I don't know if they will, but what it means is that likely we are cooling off a little bit. We're coming in for what is a healthy pullback. It's still consolidation, and that likely we could be targeting for another retest of that purple line or even just above it where I have that trend line extended outwards. If you go ahead and you look at that a little further, you can see that we have lost pretty important support. You can see over here going back into September 2022, this was resistance. Over here again, this was resistance. If you remember off of that sharp move, that's where the rally pulled back from, that resistance right around just under 13,000. And then before breaking above it, it was resistance again, closing below that line. Well, now we went from that first trend line break and now we're closing below horizontal resistance. It's a little bit more momentum signaling that we could be looking at a further pullback. You could also see that, well, that was also a bear flag that we were watching last week, and that also has now broken down outside that support of that bear flag. But it's not all bearish. Again, we are above the second repair that occurred over here. And as was pointed out, we are looking at, by Michelle, we are looking at also a bull flag over here. So this is all consolidation. You can see that we're coming into the lower support of that bull flag, and we have the earnings coming up. This is NASDAQ, tech oriented. We're looking at the two, Alphabet, right, Google, and we're also looking at Microsoft today, finding support over here. That would not be surprising ahead of earnings. But that's awareness right there. That's the type of awareness that we bring to the table. By the way, there's about another 3% fall coming into this area, this purple area of support. I think Jerome is probably happy today. Don't forget the Fed is actually trying their hardest to slow down the economy. All as they can do in regards to these inflationary pressures is try to slow down demand. And to do that, they need to cause some havoc. They feel like they're winning when things are coming off. Now, they're going to be there to backstop any type of credit event. So what they're trying to do, and they are trying to engineer a soft landing. A soft landing defined as hard landing means we entered into recession, right? They're trying their best, but they're dealing with two lagging indicators. CPI, or inflation, I should say, which is a lagging indicator, and the job market, which is a lagging indicator. Nevertheless, people think that their timing is always wrong. I do not think that. I think that they are masters of the universe. That's a shout out to a really good documentary about the financial system. But what I mean is that they are very good in doing what they do. They are looking to roll over a bunch of debt coming up into 2024, 2025. Where do you think interest rates are going to be if they do indeed create a problem? Probably for a short time, around the time that debt is rolled over, pretty close to zero. By the way, there's one more line that I want to share with you over here. You can see that this line, I'm going to highlight it over here. And I'm highlighting it, one touch, two touch. We're coming into that line at the same time. I'm going to try to extend it out just so you could get an idea. We're coming into that line at the same time we come into the bottom of this bull flag. If indeed we're going to see the markets as people have been conditioned over the last couple of weeks, the last month, to be bleeding red and then turn green, this is the spot. We're in that confluence of support. So this is the spot that we will be looking for some type of finding support and or bounce ahead of those earnings. And I do believe whether or not we go down further to test that over here, likely to come off the back of those earnings themselves. It was mentioned that right over here that it kind of looks like we're looking at a huge rising wedge. You can see it over here preparing for breakdowns. We like to be ahead. A lot of people are really good at telling you after the fact what happened and why. That really doesn't benefit myself. That doesn't help. We got 6 young kids. Yeah, it is obvious. We got to be right. That's all I'm saying. That's not helpful at all. So ahead of time, and you can see even that move topped out towards the top of that end of resistance that I'm highlighting on that chart of that rising wedge. But yeah, we are in it. We are in a downtrend. That does look like a bearish continuation pattern setting up. The fundamentals would suggest that, you know what, we could actually be seeing a further slowdown and could enter into recession. And if that's the case, we could break down, but that doesn't mean that's what's going to happen either. And what do I mean by, well, Jordan, so you're not saying anything. You're just saying that like anything could happen. Yep, it is the markets. Anything could happen. Be prepared for everything and manage your risk around it. That is what I'm saying. We could see something happen like further stress because of something like commercial real estate, putting further stress on regional banks. We could see the Fed have to be there to backstop that. We could see the balance sheet of the Fed expanding, and risk such as Bitcoin and the equity markets could be keying off of that. I would not be surprised at all. So rather than trying to guess what is happening, what you need to do is you need to manage your risk off of these levels. That's what you need to do. By the way, if you're looking for where that line came off of, this line over here, right? You could see that what I did was I have 1 touch, 2 touch. You can see it's the structure of the market. So you can see throughout that same clone line is providing the structure of the market. It happens everywhere. So I have off the bottom over here, I have that even though it's 1 touch trend line extended out, because if we do break below this purple line, that would be a very bearish technical breakdown. I want to see likely where we're going to find some type of support and bounce off of. Let's take that further next, and let's look at what that means for Bitcoin, right? For Bitcoin, we have been watching and ahead of the crowd. First, as we saw that deviation occurring. When I talk about deviation, what do I mean is we saw that Bitcoin was pointing the wrong way from U.S. Treasury tips and real yields. The last time that happened, this is inverted, by the way, so you could see how closely they are inversely correlated. Otherwise, you would have a hard time measuring it. But you can see over here, Bitcoin over here stretched away and Bitcoin caught up. Once again, we had Bitcoin stretched away, right? Yields going down, Bitcoin going up, and yields, well, actually, I'll say yields going down. Yields are actually rising here. Bitcoin was going up against it, and we saw them to correct. And now we see yields coming off. Would it make sense here for Bitcoin to find some footing and to stabilize a little bit, maybe even ahead of whatever communication Jay Powell and the FOMC give us? I think so. I think that's actually what is happening. And you could see we would not be surprised to see some type of consolidation form over the next, in the foreseeable future. However, from a technical basis, and I want to remember this line we've been watching all of last week, right? I know Friday and yesterday were private CTM sessions. I was away. I'm always there for those that want to be tightly, closely informed. Those that are really tight with us. At the same time, we've been following exactly what is happening over here. And if I zoom in over here on the 2 hour, you can see these lines. You saw them on Thursday. They haven't been moved or touched. You can see price broke below that first one on linear, right? Came below the green one, bounced into it. It was resistance, traded back a low. It didn't resume. It didn't make a lower low over here. Instead, it was able to get back above it. But what it do? That upper line, it's a good thing we kept both of them there. Resistance, resistance, resistance. Oh, wait, that was then finding support. And since we've broken down. Now, that's a breakdown below 27,500. That's the next level that was given as far as after losing this level over here, 29,000, closing below it. We said that takes us from a very bullish, positive structure and put us neutral. We were neutral below this area. Getting back above it would have taken us positive. And then we were neutral. Why above 27,500? That is broken down. You can see here the breakdown, the retest, and we're looking to resume down. We have not yet done that. We are just consolidating thus far. An invalidation for that breakdown is going to be getting above this line that I'm highlighting here. That line and getting above it, and you can see that line structurally where it came from as we were rising here throughout late January, February, and into March, right? Then you could see that once we cleared above it, that line was also tested. That resistance was flipped to support. Now that it's broken, again, it's acting as resistance. It's real. It gives you an opportunity to manage risk off. Getting back above there, closing above that line, well, that would send us back neutral with a pretty positive spin. That would be like this breakdown over here. You know what? It didn't have momentum. Get neutral, because if we close above this line, that is very bullish. We're looking to go overhead and we're looking to resume above this high and test this resistance above us. That would be welcomed. That is where this current breakdown is invalidated, and that's where it flips bullish. But right now, in the near term, we do have a bearish bias as we've broken down over here. It's setting up, if we could resume below this low over here, for a test of this last breakout above 25,000. Let's call it 25,000, but just above 25,000 in that area. And that would be an important support to hold. A test of that is entirely healthy. A breakdown sets up a test of the bull market breakout. And we will make sure that we are looking at what indeed the bearish case for Bitcoin is ahead of the breakdown. Because you know what? Being psychologically prepared is essential. A lot of people, who was it? Mike Tyson, who said everyone has a plan until they're punched in the face. If your plan is up only 2023, it's written in the stars, we make a new all-time high before the halving, well, then you better have a very clear and concise understanding of what the bearish case for Bitcoin is, just in case you're wrong. All right, let's keep going over here. And this is going to be setting up, coming up, the bearish case for Bitcoin. But I just want you to notice that we are in this downward sloping channel, right? We've come up towards that resistance. And the breakout of this downward sloping channel, well, that's quite bullish when it happens. It reminds me of this chart we were looking at just last week. We were looking at the ETH Bitcoin chart. We were looking at it from the perspective of adding some crazy lines in it. But do you see that channel? Right? By the way, prior to the Shanghai update, we talked about, well, that's probably going to be for Ethereum, more of a sell the rumor, buy the news type of event. Sell the rumor as in volatility for Ethereum was down. Bitcoin here doing Bitcoin things, really growing in dominance against it. After the update and into the support, we did see Ethereum here make another run at the resistance. As it was into the resistance, all as we said is, look, I don't think it's going to break out here. I don't think we're going to have alt season. But when it does, that will be the signal. And whether it's here, here, or here, I have no idea when it will be. But when it breaks out above it, at that point in time, that is when we're going to see Bitcoin, the rising tide that lifts all boats. And then we're going to see those faster boats running against Bitcoin. And that will be alt season, or at least we're going to see alts making gains, not only versus Bitcoin, but versus the dollar. Whether or not it's an alt season like this, like where we see significant gains or not, we'll take it as it comes. A lot of people want to be told what is going to happen in the future, Well, we're dealing with the markets, and the markets are like this organism that is constantly taking in new information, not only daily, not only like hourly, but every second. And investors are pricing it, and it's constantly evolving. You can't form a square opinion and expect that's going to work out. You have to stay fluid. You have to be able to do this with bias. But this downward sloping channel that we have here on Ethereum, Bitcoin, reminds me a lot of what you see over here on Bitcoin itself versus the US dollar. A breakout above, that is going to be likely when it happens on Ethereum versus Bitcoin. That's likely where we're going to see Ethereum running hard versus Bitcoin, as well as Bitcoin versus the US dollar. I know and you know that we all have levels above to watch out for. One of them I'm highlighting over here. It is the 0.786 retracement level. It happened in the previous cycle. It happened in the previous cycle before the halving that we reached that area. It's around $50,000. If that's happening, I'm going to get cautious, and we're going to be setting up likely the accumulation phase before the next halving. A lot of people think that halving cycles don't matter. Maybe, maybe not. For me, all types of viewpoints and awareness are what matter. It helps me know whether or not I am right. I could go back to something like the underbelly breakouts that were announced advanced. And sure enough, why people were looking for Bitcoin in early 2023 to be taking out those lows, that helped us see the breakout, second confirmation that we were headed up, and headed up indeed. We have continued to follow through. We're looking over here this week at the Bank of Japan. That is the major news event, high impact news event happening on Friday. And then also, by the way, you have core PCE. Right now, the markets are pricing in a hike coming up, a 25 basis point hike coming up at the May meeting, and they're currently pricing in a pause. We talked about how the markets were pricing in right now almost perfection, that the Fed, there will be no recession, inflation will continue to roll over, and at the same time, not only is the Fed going to and ECB lower rates, but what comes next is that pause. If Powell likely, right? So I guess where the markets are wrong is if Powell keeps the June meeting alive. Powell could very well say, okay, we're moving towards, this is the last rate hike. We're now going to try to keep rates as elevated for as long as possible. If that happens, I am so interested to see what the market's reaction is. When the Fed moves to a pause, and the last time the Fed moved to a pause, let me pull up a different perspective for you. This is the last time that the Fed paused, exactly where we're looking at over here. This was the last rate hiking cycle, and you saw rates being raised, Bitcoin under pressure, Fed pauses, and risk shoots up. By the way, quantitative tightening was continuing to run. We expect quantitative tightening continue to run. As you all know, throughout 2023, I've been saying, look, you got to follow the flow. Global liquidity rising. We're seeing these repairs take place. I am, from a macro perspective, worried about what happens the second half of the year. I am worried when the U.S. Treasury stops counteracting through extraordinary measures, quantitative tightening, and then begins pulling away liquidity. A lot of people now are understanding that what happens next, that's something that we will focus on this week together and make sure that you understand exactly what the potential risks are. By the way, just from looking at this chart from this perspective with me, right? We're waiting for the breakout outside of the channel. We've just come into resistance though. Usually resistance is resistance, but you could see that a breakdown of this trend line, and you all are familiar with that trend line because we've looked at it from many different angles and together on both the linear and the log over here. We've even looked how far back that breakdown below that would be the most important test of this bull market. If that were not to hold, we would be looking at some pretty bearish things taking place. S&P 500. Let me jump over to the S&P 500 quickly before we move back. And before we do, I just want to make sure that I do not lose my footing, my place. Maybe I lost them all. All right, we're good. We got the NASDAQ. If I showed you this chart, you'd be like, what is that? But doing the way I did it, adding in the lines, that really I think is helpful for a lot of people who do not follow us closely. S&P 500, we are looking at a breakdown occur. Purple line coming off the lows, CTM style over here. We've seen a breakdown occur. We've seen a retest occur. And now we are seeing a resumption down occur. So after seeing a CTM breakout in play, we have resistance above us, clearing above that. Right now we're looking at a breakdown occur. So where could that potentially go? So I'm going to extend this line out because this line over here was pretty important. You can see resistance, resistance. This is where CTM helped me realize what the next move for the S&P 500 was going to be. Because I was a little fuzzy for me. I just really was neutral. And then you can see a breakout, retest, resumption. This is where it ends. Buy, sell. This is where it ends. And in order for this to be nullified, you got to technically clear above that high. But we have this high over here, this horizontal resistance that we want to clear above. That's where this sell entry would be wrong. But as you come into that first area of support, which I'm highlighting, right? You can see this area of 2 touches over here, this area of first local support. That's where you would then, if you took this trade, take a little bit of profit. You would take it's up to you, 15, 20, 25% off the trade and leave the rest to roam, moving your stop loss to break even at the time you do. I think it's a little premature, still giving it room, even though we're coming down and touching this level. I have 2 touches over here. This is the area that I would mark. And then this would be another area of potential looking to take profit into that tested support. If we lose that green level, right, at that point, we could be looking for a further breakdown, even potentially setting up the 2022 lows. So that's all we are. This is still positive in so much as that we broke outside the bear market trend line over here. We barely made this retest. There were no closes over here on the daily time frame below it. Barely held over here. And then this one I missed. This trend line I'm highlighting over here, that would have been the correct place to look to buy off of that retest. I was not aware of it. I missed it. And then over since then, you had that retest, resumption up. This is where we got in. This is where we get out. That's the S&P 500. Money Masters. Mohammed, when you signed up, I just saw it before going live. You didn't subscribe to the updates, so you didn't get the onboarding email. Look for that right now. Welcome, the welcome email, because I went ahead and I fixed that. And if you respond to that with your TradingView username, I'll then be able to begin the onboarding process with you. So please, Mohammed, go ahead and do that. Breakdowns, create breakthroughs. Here we go. Let's keep going. CTM, we got, let's pause 1 second here. Let's play a little head snack here on this Taco Tuesday before we continue forward.
Markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing, just to pretend they're in fashion. See the like button, comments, and smash it. Boom, boom, Jordan in the room, grab the bull by the horns and to the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
Oh, delicious tacos. Absolutely love them. By the way, the more tacos you eat, the better, the greater your chance of being on the right side of the market. We will come back to this later. We're going to come back to this massive 12-year up bull market in gold, followed by a 12-year consolidation, cup and handle forming over here, getting ready for a potential breakout. And if that breakout occurs, it could be starting a massive secular bull market in gold. We'll look closely at that in the days to come. We'll be looking and just jumping in over here and looking a little bit closer on a smaller time frame. This is the monthly on the left. We'll be looking here at the daily, the 8 hour, trying to get a little bit of clarity about when that breakout is happening or when a further pullback or breakdown is coming. Could we be looking at 3 rejections here? A close above, well, that's as late as you can be. We will try to see if we get a further pullback or a resumption out of it for what a better entry might be. If you're able at any point in time to turn a swing entry into a position trade, your risk to reward level is going to wind up being a lot better. Again, this is late, but it's still on time. A close above here would be, a good time to act, and likely there would be a lot of follow through occurring. Now, likely this trade over here is going to be impacted by what happens on May 3rd, FOMC, when Jerome Powell takes the mic. If we're looking at, for example, that not being the last rate hike, if Jerome leaves on the table the June meeting, and then we see data confirming that there's every reason for the Fed to continue to hike, at that point in time, we would see probably gold come under further pressure. If gold sniffs out that the Fed is looking to pause rates here, that inflation is going to continue rolling over, and that the next move by the FOMC is going to actually be rate cuts, we could see gold make the breakout. By the way, the most important thing on my mind, the way that I view markets, is I am watching what happens to the equity markets here once the Fed does indeed actually pause. If the Fed pauses and we don't see that similar price action coming off of the low as we did in Bitcoin over here, and don't forget, over here in real time, the Fed has not paused rates, and we've seen Bitcoin making that move off the low. Well, what happened over here? Well, this is when we began to see two things. We began to see inflation rolling over, and we began to see those lesser degree of rate hikes, right? So that's what we saw occurring over here when the Fed, this time is different. And when the Fed pauses, if we see risk make its run, and that's going to be a good sign. If we see the NASDAQ over here, hold this area potentially, and then resume up, take another run at that green line, and then get above it, then equities could be taking a look over here at possibly even making new all-time highs. That's what would have happened last tightening cycle, even why quantitative tightening was running. However, if we see a technical breakdown, if on Bitcoin we see a technical breakdown, that's going to be very alarming. The market should not be breaking down when the Fed moves towards a pause. Now, when the Fed begins cutting rates, that's usually when markets are under pressure. The reason the Fed is usually cutting rates is because that slowdown is accelerating, and the Fed has what seemingly is behind the curve, needs to go ahead and catch up. And what they're doing is they're lowering rates as close to zero, in this case to roll over the debt, but also then to restart that easing, that quantitative easing, which, as Bernanke has let us know, is most effective when rates are at zero. Boom, 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 boom. Yeah. So let's keep moving forward. I need to spend some time this week catching up to the Summit team, the dev team, Summit team, looking for what we're doing next over here. There's a lot of massive work that is put out. The reason I'm saying this is to make it a high priority of mine by the end of this week to make sure that has taken place. Maybe even next Wednesday, we'll set up a meeting with the Summit team and move forward like that with that type of collaboration. We're looking here at knowing when to be out of the market is just as important as knowing when to be in and on what side. You're looking at BTO and now BT waiting for even a potential buy over here, which would mean a breakdown occurring. a breakdown occurring. Ba-dum-bum-bum. So let me move this off. Let's get into a little CTM 2.0. Talked about knowing when to be out of the market. That last Bitcoin exit occurring at 30,000. Bitcoin over here since then, retracing. Ethereum exit, taking out of that trade. And yeah, I know it was only an 8% gain when it was holding significantly more profits. But getting out of the trade and knowing when to be out, absolutely priceless. We're looking at Cardano, the last of the three on the 8-hour time frame, holding an open position, and it's on the buy side. That is currently at 0 right now. Cardano was very close to exiting that trade. Cardano just an hour or 2 hours ago now was looking to close that long pending trade. You can see over here, it's very close to an exit. It's currently still holding on. It's come up over here, right? First of all, talking about that Ethereum, we'll start over there. We'll start with Ethereum and a little feedback. I just can't believe how much more confident I am following CTM 2.0 with my Ethereum trading strategy. I would have been a nervous wreck the last week in this chop. I finally feel like I don't have to worry about being positioned wrong on the down moves while still taking advantage of the good quality up moves. Fighting the urge to deviate. This is 2 in a row because I'm setting up the Cardano. Fighting the urge to deviate from CTM and sell Cardano on the 8-hour and the daily. Got to trust the strategy, but I'm having a hard time with it right now. Flav Frav, trust the data. Numbers don't lie. Your brain will tell you to do anything in an effort to avoid pain or failure. Look at this wisdom. This is probably the most important thing you could take away from David. We'll look at the S triple Q. We'll look at that in 1 second. Let me finish CTM positioning, Dave, and then we'll get into stocks in 1 second. Your brain will tell you to do anything in an effort to avoid pain or failure. It's just part of our evolution. If you sold, then Cardano turned out to produce but a mega return. I guarantee that would be more painful than a small loss. Look, you have to view it in that light, right? Let me show up and actually transition it over here. This over here at this chart, fire, big shout out. I'm going to go ahead and show you how to go ahead and do this on your own. You're looking over here at what looks like up and to the right, up and to the right, up and to the right, right? You don't get these type of performances, right? Notice the drawdown, right? Notice the percent profitable, less than 40%. You don't get these gains if you're deciding, to add subjectivity to it. Your greatest chance of emulating, and of course, any type of past performance is not indicative of future results, but you don't put yourself in the position to emulate it by any means if you are taking yes, that is 9 million. Going back to 2016. Yes, that's only a 23% drawdown. And once again, that percent profitable is less than 40%. On Cardano over here, this is going back to 2017. And you're looking at a slightly higher win percentage. But notice the drawdown, 24%. It came up, right? You don't get to participate in the potential if you are starting to deviate. That's why you could see that in any individual trade does not matter in the greater scheme of things. Let me show you how to go ahead and get these charts over here in the light green. You're looking at the account balance. The blue line is the last all-time high inter-trade. What you want to do is you want to go into properties of the CTM 2.0 script, right? So from inputs, you want to go to style. From style, remove background, remove long deviation, remove short deviation, and click on equity and click on high water mark. I go ahead and I set that to green, equity to green, and I set high water mark over here to blue. It's just the way I've chosen to do it, right? And then go down further and click off zero line, click off labels, click off trades on a chart, check off quantity and signal, and only leave tables checked. If you go ahead and you do that, then you will have taking our, going ahead and just taking this chart over here. I'm going to do the same thing right now for you. All right, I'm going to go into properties. I'm going to go into style. I'm checking off background color. I'm checking off long deviations. I'm checking off short. Equity, green. All right, high watermark, check it. Put it that blue. Go down further, take off zero line, take off trades in a chart, take off signals on a label, and then you will see you have over here the exact same thing done the way that we were doing it. And you think that's up and to a right. It's not like that. I know from a longer perspective, it's up and to right. But often you're looking at that new all-time high count. You see price running sideways in drawdown before making those new launches roaring in the bliss to the upside. All right, let me just get that chart back. All right. Next, I know I've been meaning to get that one out to you. I wanted to make sure I got that out to you. My man Steve Van Meter. I remember back in 2020 when they were insistent that the Fed's actions were going to be deflationary. My man, I remember that. I remember in real time having those debates. Some people were right. Some people were wrong. Follow those with the history being right, but make sure that you consult all opinions. On the daily, Bitcoin here has taken profit on Bitcoin. Daily time frame, an amazing asset in that you only need to potentially take a trade or an exit once a day. Stop loss could be hit at any point in time. Ethereum here finally turning green in 2023 and then entering short. It's currently holding a short position. The stop loss here is 11.7%. Question comes up, Jordan, the daily signal has a stop loss of 11.7%. Is that large stop loss common for the daily time frame? It's a big stop loss, right? Look, I put it out like this. I think it's important to realize it's all in context. By the way, Cardano on the 8-hour time frame uses a 20% stop loss. On Ethereum daily, the stop loss is 11.7%. Why past performance is not indicative of future results? Going back to 2016 on Ethereum in the daily, the average stop loss has been 4.13%. Right? So this is the daily time frame. The daily returns are not as great as the 8-hour, but it's a lot easier to trade the 8-hour, right? Drawdowns also are less on the 8-hour, but for someone who's looking to get it done, we got physicians in the group, we got busy moms in the group, raising families, nothing busier than a mom. This is a way that you could execute, roughly 12 to 18 trades a year. You get an alert on your phone. It's a lot easier than doing something potentially on the 8-hour. Over this period, the average loss, even though the max safety stop loss is 11.7, has been 4.13%, right? With the 11% safety stop loss, the strategy is designed to get out ahead of the stop loss. I also like to look at the max drawdown during that period, which is circled in the image. It's about 33%. Now, looking at the overall gain during that period, it seems reasonable and acceptable to me, but you need to ask yourself. And just for some perspective, by the way, let me just show you the 8-hour going back to the same period on Ethereum because it's different, right? Let me just jump back over here. That was looking from 2016, right? I mean, that does say 30 million. The drawdown's a little higher, 35%. It's not until 2017 until present, right? This is Ethereum going through its hype phase. It's very volatile, that the drawdown comes down substantially. So since 2017, the drawdown has been quite attractive. Why the return look at the percent profitable. You all want to be right all the time. You all want to be right all the time. We don't care. It's not about being right. It's not about any one individual trade. It's about a process, having a system with an edge. Do you think that the house, the casino, that they care about any individual blackjack hand? No, they know that they have the winning edge. So therefore, they're looking to play as many hands as possible. Look at that. Those that want to be right all the time, that want to have an 80, 90% win percentage, they could go through some periods where they're on the right side because 80, 90% of their trades are winners. But those 10% of losses, 20% of losses will wipe out all of those gains, plus take that account and wipe it out. Is not how you trade. It's very important to understand. It's not about being right. It's about pushing your trades when you are right, managing your risk, cutting them short when you are wrong. Question came up about stocks. SQQQ remains out of the market. Now, I do realize that the markets are currently correcting. By the way, you can look at like traditional equity investors, and a lot of them throughout 2023 are positioned on the wrong side of the market. There's no question about that. Now, if they were getting short, and if this is the top, that would be the time. But you don't ride up all of 2023, right? Jumping back over here, 2023, you can't be on the short side that whole time because price is moving up. And you could see from the long side here on TQQQ for the year, it's okay, right? Locked in 7.8. On the short side, though, no. There's a loss here of 3.3. So you're talking only being for the year up about 3.5%. Okay. It's a process. It takes time. The average gain on the indexes is like 7-8%, a year. If we're into April, you're up 3.5%. You're setting yourself up for a year that's outperforming, let's say the benchmark and or the majority of fund managers. Now, by the way, the gains, let me just take a minute here. This might get thick. Let me come back to that. FNGD, this is the inverse as well. It's currently out of the market as well. FNGU, this is the buy side, in the same amount of time is absolutely crushing it in 2023. This is an 85% return. It's crypto style return, outperforming all crypto in 2023 on the buy side. The sell side's out of the market, right? Sell side for 2023 is break even. The gains made on the sell side are not as significant as the gains made on the buy side. They do protect purchasing power, right? If I go back and I show you on FNGU and I go back to 2000, I do believe that, let me do it. So sorry about this. I want to know exactly what it is. So I go back and I look at the last 3 years and, on the buy side alone, you could say 2,300. Okay. What about the sell side? Now watch this. Here comes the punchline. On the sell side, you're looking at only a 70% gain. Okay, well, we'll add them together, though, and let compounding do this thing. And let me add in the short side over here. And compounding together, both sides, does enormous things. Now, that's not the performance here on the sell side and the sell side alone. I hope you can keep up with me here. And if you can't in time, you can see that that's 100%. I'm not trading both sides of a buy side 3 times leverage ETF. There are plenty of people who could borrow and trade both sides, but I'm looking here at when you're looking at selling, buying the inverse, right? And that return is only 70%. That's not 104%. So as I look at that overall compounded return together, it's not, it wouldn't add up to 8,000, but it would, like, I don't know, 6,000, 7,000. You get the point though, right? And that's all I'm trying to do is make the point. Now, on the TQQQ, on the short side, and just to give you a perspective of what's that done over the last 3 years, 160%. And so full of perspective today. The buy side, though, is substantially greater, right? 641%. Add them together, you get nicer gains, right? You got compounding really taking effect over here, and that's a nice gain. What I'm getting at is that the short side, you're watching this move that's happening. We've seen like price rolling over a little bit here off of the top. and you're like, we're not long on FNGD. We're not long on SQQQ. I know. And this small trade could become a big one. Like, you never know which trade is going to be the big one. But over a long period of time, and going back over, they're not like, it's not known for making like big gains. Now you can see the difference when you add them together about the effect it overall has. But this is traded on the 1 hour time frame. It's not involved in this trade. If indeed this is the sign of something bigger to come and price breaks down and roll over, those FNGD and SQQQ will be entering the market and participating on the downside. So I think then finally I was able to really express very well the point that I was trying to make. And then some people even trade, Tesla. Tesla's out of the market here on the buy and sell side. This is not a leveraged ETF, so I have the buy and sell side together. 2023, it's a good return thus far. Right, go back further. It's a great return. There's no question about it. It continues doing its thing, right? Adding stocks that's like Bitcoin-esque returns, better, it's really good returns. Knowing what side of the market to be on, when to be in the market and when to be out is absolutely priceless, right? Now, this is a 1.5 leveraged ETF. It has, 1.5 times the size of the gains thus far. And this is, some of you have taken profit here, right? Some of you were looking at the inverse Tesla bear ETF. So you're buying when it's going down. And you can see that has just taken a nice 12%. This is what CTM does. Small losses, big gains. Big gain, big gain, small losses. Oh, by the way, we take many more small losses than big gains. Oh, small losses, big gains. That's how we roll. All right, everyone. For a Taco Tuesday session, we're right on point, right? Oh, why didn't it enter? Let me just let you know exactly so you could see. SQQQ. It didn't enter because at the time that we had the deviation to the upside, do you see this green line over here? That's the CTM filter. Okay? It will only take trades the way that the SQQQ strategy is. It will only enter the market if at the time of the cross, the CTM filter is active. Now, we do have, for example, like on Bitcoin, on Ethereum, at the time, if the CTM filter is not active, it will wait for it to be active and then enter the market. That's not how this strategy works. You can see over here that it's checked off long only on the crossover when the filter is active, compared to like something, let me just jump back over to the Bitcoin or Ethereum's over here. And you can see that that's not checked off on the long or short side. So does that make sense, David? Does that really help you understand exactly what's happening there? And at the time of the qualification for entry, didn't have the CTM filter active, so it didn't meet the entry criteria. And the way that SQQQ is set up is it will just stand aside. Yeah, automation's like very easy to do, but it's also very dangerous. If you are aware of what happened in 2022, there was a lot of API leaks, specifically through 3 Commas, a third-party vendor that helps people set up automation, and people lost a lot of money. I have to admit, the strategy automated is significantly easier because that takes everything out of the equation. You have to obviously monitor and make sure that the automation continues to be up and running smoothly, but in a sense, it's very easy to automate anything that's rule-based. But at the same time, do you want to take on that added risk at this particular point in time? CTM long-term, is looking at building potential in-house solutions. I'd feel much more comfortable with that. Many of you have already even built your own. That's a lot safer. Now, I know that 3 Commas, they put in some security steps after the API leak. Nevertheless, this is all about managing risk. Do you feel that is a risk that you need to take on at this particular moment? Or do you feel that, it's worth it to you maybe to trade the daily time frame, which is quite easy to do? Or do you feel like, you know what, these returns, look at Ethereum here since 2022. Most people think it's a tough market. It's pretty good. What about, adding in since 2021? I'm not showing the drawdown. I want you to see the drawdown. These are, is it worth it for you to, trade 3 signal periods a day? Is it worth it to you? And are you willing to, when you have a potential signal and you get that alert and phone, wake up if you have to in the middle of the night? Now we're looking to, and this is also, I'm going to say this for my own benefit here. We're looking at, and definitely inspired here by the Summit team, looking at a solution that is more of like a hybrid between the daily and the 8-hour. So it avoids that overnight signal period, so that it's only potentially 2 signal periods a day during waking hours. And those returns, while they might not be as attractive as the 8-hour, if they're better than the daily, that's quite an attractive thing. If you look at the daily time frame and you come back over here and you're looking at 2000, and we just looked at 2022, right? And then we looked at 2021, and then we looked at 2020. If you do the same thing on Ethereum, I mean, that's a pretty good return since 2022. And then you add in 2021, and this is the daily time frame, so the returns are not the same. That's a really good return, right? And then you come into 2020, and that's a phenomenal return. It's not as good as the 8-hour. So if we could put a hybrid in, that might be a good solution. And then, why automation's easy, it's a question of, do you want to do it? Steve, it's so important. There's so much noise out there that, if you have the ability yourself to discern what is signal, that is, a sincere hat tip to yourself. But we try to do that here together. We try to help people to be able to filter out noise, to be able to discern what is signal, even when you're looking at something like CNBC, because this is mostly noise, but there is some signal within here. And we try to look at how we find that. And Zero Hedge, there's a lot of noise. It has a lot of nonsense too, but there's also a lot of high signal. It's a small percentage, but if you're able to find it within there, that's what you want to be able to do. And I think that is, I was hoping that we would, that's why I would like to deliver 100 likes. But if you're watching this on the replay and you made it all the way through, if you haven't yet subscribed to the channel, please go ahead and do that. And also on your way out, do hit the thumbs up. I want to make it to 100. Thanks for being here, everyone. Thanks for putting the work in. One thing that this does require, for sure, is unlike just like, someone out there, whether it's like, I'm a perma bear or up only, it requires work. And that's what it takes to stay on the right side. The collaborative effort of CTM 2.0 is like nothing else. Thanks for being here, everyone. God bless you. Have a wonderful day. I'll see you all tomorrow.